Artificial intelligence is the hottest sector in the world right now. Companies are pouring billions into chips, data centers, and AI startups. Investors are chasing every opportunity. Politicians are promising to make their country the leader in AI. The result? An AI investment boom unlike anything we've seen in decades. But here's the big question. Is this boom a sustainable revolution or a bubble waiting to pop? And if it does pop, what happens to the global economy? Let's start with the scale of the boom. In just the past year, tech giants like Microsoft, Google, Amazon, and Meta have spent tens of billions of dollars building out AI infrastructure. NVIDIA's revenue has skyrocketed because its chips power nearly every major AI model. Startups in the AI space are raising money at valuations that sometimes defy logic. We've seen AI companies with barely any revenue valued in the tens of billions. If that sounds familiar, it should. The hype feels a lot like the dot-com bubble of the late 1990s. But there's a difference this time. Unlike some dot-com companies that had nothing but a website and a dream, AI is already producing real results. Chatbots like ChatGPT and Google Gemini are being used by hundreds of millions of people. Businesses are adopting AI for customer service, data analysis, and software development. Productivity tools are already being reshaped, so the foundation is stronger. Still, the speed of the investment raises concerns. One red flag is concentration. Right now, most of the AI boom depends on NVIDIA-GPUs. That makes the entire industry reliant on one supplier. If demand slows, or if better chips emerge, the value tied up in this supply chain could collapse. Another red flag is the infrastructure build-out. Tech companies are racing to construct giant AI data centers, but those centers are expensive to run. They consume huge amounts of energy and water. If revenue growth from AI services doesn't keep up with costs, we could see companies saddled with massive expenses and disappointing returns. The startup scene is another risk factor. Money is flooding into generative AI startups, from chatbots to image creators to video platforms. But how many of these startups have real business models? Many are burning cash to gain users, but few are generating profits. If investors lose patience, funding could dry up fast, and dozens of companies could vanish overnight. That's exactly what happened during the dot-com bust. So what happens if the AI bubble pops? The first impact would be on stock markets. Tech giants like Microsoft, Alphabet, Meta, and NVIDIA are driving much of today's market growth. If AI expectations collapse, these stocks could drop sharply, pulling down the broader indexes with them. That could ripple through retirement accounts, institutional portfolios, and global markets. The second impact would be on venture capital and startups. Right now, investors are pouring money into any company with AI in its pitch. If the bubble bursts, capital will dry up. Startups would fail, employees would be laid off, and innovation could slow. We've seen this story before in other hype cycles. The survivors usually emerge stronger, but the shakeout is painful. The third impact could be on infrastructure. Billions of dollars are being spent on AI data centers, semiconductors, and cloud platforms. If demand doesn't match the build-out, companies could be stuck with massive overcapacity. That means wasted resources, layoffs in construction and tech, and potentially a freeze on future investment. But here's the flip side. Even if there is a bubble, not everything disappears. After the dot-com crash, the internet didn't go away. Companies like Amazon, eBay, and Google survived and thrived. Similarly, AI is real technology with long-term potential. A bubble popping might wipe out speculation, but the core technology will remain and continue advancing. In fact, the crash could separate the hype from the true innovators. So how do we know if this is a boom or a bubble? The key question is whether companies are creating sustainable business models with AI. Are they using AI to generate new revenue, reduce costs, and deliver real value? Or are they just slapping AI on their pitch decks to attract investment? Right now, It's a mix of both. Some companies are making real gains. Others are pure hype. Governments are also shaping the story. Countries are investing heavily in AI research, subsidies, and infrastructure. The US, Europe, and China are in a race to dominate AI, and none of them want to slow down. That means even if private investors start pulling back, public money may keep flowing into the sector. That could delay or soften the impact of any bubble bursting. So here's the bottom line. The AI investment boom is real, but the risks are just as real. If revenue growth doesn't match expectations, if infrastructure outpaces demand, or if startups fail to deliver, the bubble could pop. The immediate effect would be painful: falling stocks, failed startups, and wasted investment. But long-term, AI isn't going anywhere. Like the internet, it's too fundamental to disappear. The companies that survive will reshape industries for decades. The real question isn't whether AI is here to stay. It is. The real question is, who survives the shakeout when the hype fades? So what do you think? Are we living through an unstoppable AI revolution? Or is this just another bubble waiting to burst? Let me know in the comments below.